All right, today we are going to break down a systematic blueprint for building wealth. This is all based on a really deep analysis of how the most affluent people actually manage their money. Let's jump right in. So, I want you to start with this one question because it pretty much changes everything. We're all taught to think about our paychecks, our salaries, but what if that's actually the trap? The real mental shift, the big one, happens when you stop thinking like someone who earns money and start thinking like someone who owns things. And here's where the data really backs this up. It's pretty fascinating. According to expert analysis, a whopping 75% of the wealthiest people are entrepreneurs. They own businesses. Another 15% are primarily investors. You see the pattern here, right? The common thread is ownership. Whether it's a company, an asset, or even a skill that's incredibly rare. And notice who's missing from that chart? The typical 9-to-5er. Okay, so here's the game plan. We're gonna walk through a 6-stage blueprint to put this whole ownership idea into action. We'll start with the mindset, then we'll build the financial engine, explore the different ways to grow, open up the investor's toolkit, show you how to build a financial fortress, and then finally figure out how to activate your own personal plan. First up, let's talk about the ownership paradigm. This is the foundation, that crucial shift in how you see the world. So here's the bottom line. Real, lasting wealth isn't built on just getting a bigger paycheck. It's built on owning things that generate value totally independent of your time. We're talking about a business that runs while you're on vacation, an asset that grows in value while you sleep, or a skill so unique it commands a massive premium. Ownership is the name of the game. Okay, so that's the big idea. But how do we turn this into a practical system? You have an income. How do you actually convert that into a powerful engine for building wealth? Well, the core mechanism is a super powerful framework, the 50-25-25 rule. It's simple. 50% of your income covers your essentials. Housing, food, the basics. The next 25% is for everything else, paying down debt, building up some savings, and your personal spending. But it's that final 25% that completely changes the game. This right here, this is the number that matters more than any other. This 25% isn't for saving. It's not for spending. It is dedicated to one thing and one thing only, growth. I want you to think of this 25% as the high-octane fuel that you pour into your wealth-building machine every single month. This is the portion of your income that you actively put to work, buying assets and building things that are going to grow your net worth over time. This right here is your ticket out of the rat race. So you've got the fuel, you're setting aside that growth capital. Now what? Where does it actually go? Well, there are 3 main pathways you can take to deploy it. You can use that 25% to acquire assets, things that go up in value or produce cash flow. Or you can use it to acquire high-value skills that will dramatically boost your earning power. Or you can use it to build a business that has the potential to really scale. Every single one of these paths is a legitimate way to turn your income into true ownership. Okay, let's dig a little deeper into that first pathway, acquiring assets. It really helps if you stop thinking of them as just investments and start thinking of them as tools in a toolkit. Each one has a very specific job to do. Let's look at 2 of the biggest tools in the box, stocks and real estate. Now, historical analysis shows that stocks tend to deliver higher long-term returns with way less effort. They are a fantastic tool for passive growth. Real estate, on the other hand, is a completely different kind of tool. Its real power is in leverage, cash flow, and some pretty amazing tax advantages, like depreciation. Yeah, it's more hands-on, but it's an incredible way to generate income and slash your tax bill. And the toolkit doesn't stop there, of course. You've got index funds for simple, diversified growth. Gold has traditionally been a solid hedge against inflation. Some reports even point to Bitcoin as a high-risk but potentially high-reward digital version of that. And then there's the big one, business ownership, which has the absolute highest potential for scale and wealth creation. The key is knowing what job you need done and picking the right tool for it. Now look, building wealth is only half the battle. Once you start actually accumulating some assets, you have got to build a fortress around them to keep them safe. But here is a really critical insight from an anonymous expert report. So many people get obsessed with complex legal structures way before they've even built anything worth protecting. The order you do things in is absolutely key. The strategic way to do this is in phases. Phase 1 is all about growing your income. That's it. Phase 2 is asset accumulation. Your only goal here is to grow your net worth to a meaningful level, let's say over $1.5 million. Only then, once you get to phase 3, does it make sense to start thinking about organization and putting those advanced legal structures in place. And when you do get to that stage, there are 2 main tools you're going to use. Think of an LLC as a legal firewall. It separates your personal life from your business or rental properties to protect you from liability. Then you have a revocable living trust, which acts like a central command center for all your assets. In a typical setup, the trust actually owns the LLCs, creating this really streamlined structure for managing everything and, down the road, for estate planning. Okay, we've covered a ton: the mindset, the engine, the pathways, and the protection. So now, let's bring it all home and figure out what your first move should be. So, this is the most important question you can ask yourself right now. Where are you in this blueprint? Because your starting point is what determines your very next action. It's pretty straightforward. If your biggest challenge is just not having enough income, your entire focus should be on pathway 2, acquiring skills to earn more. If you already have disposable income, then it's go time. Start fueling that 25% growth engine by buying assets. If you're getting crushed by high-interest debt, your priority is to use that second 25% bucket to strategically wipe that out. And if you've already built up a nice pile of assets, well, your next move is to start researching how to build that financial fortress. And really, that's the ultimate takeaway here. This isn't about just chasing more money. It's about methodically building an ownership-based system, a machine that generates wealth on its own, protects itself, and ultimately works for you. That's what gives you the real freedom to design the life you actually want to live.